Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys are all having a great day. It's Friday. We've made it to the end of the week, and what a freaking week it has been. In all reality, there's a heck of a lot to talk about, from a news cycle perspective, but we're just talking about the markets today, and we're going to take a look at what the markets look like for this week. We talked late in the year last year about the fact that we typically see January with a bit of a surge. A little bit of a surge typically on in January is not shocking. We did get a big pullback early in the week, but that big pullback was after the S&P set a new all-time high, and then we've continued to rally up ever since that point. So hopefully you're able to catch some of this week's ride, as that's kind of what the market has looked like it's done. So if you're new to the channel, do me a favor, hit the subscribe button, the notification bell. If you regularly view us, hit the share button. I'd love for you to share the link out with other people, other traders. Let them know that we're doing this every day, and then hit that thumbs up icon. It means a lot. It helps us a lot. So let's go ahead and shrink my face, and we're going to go and get started with what today's market is telling us, and really what we're looking at. Now, remember, we're heading into a weekend. So when we think about our weekend, what is our mantra on holding futures positions over the weekend? Our mantra is very simple. If you choose to hold a position over the weekend, just number one, understand the gap risk that you face. Number two, if you're not comfortable with the gap risk, then utilize options to hedge that position. Number three, if you are not comfortable with the gap risk and you don't want to use options, then don't hold the position over the weekend. Just keep that in mind. I think that's something very, very important. Now, the weekend typically does give us good tradable opportunities, and we'll see what those opportunities look like. So looking here at the ES this morning, we are up about 11 points this morning. Yesterday, we saw the big rally early in the day. And that big rally that we saw early in the day never really gave us a good retest. Now, we broke above the all-time high, and we did identify this area here for a potential retest zone, setting in a brand new all-time high last night. And we talked about the fact that typically when you see the S&P create a new all-time high, you get a pullback for a day or two. Well, we created a new all-time high as of January 1, and we pulled back, but it was really just for the day. And so we've then continued to rally back up. Overall, we're still seeing some divergence in this market. Does it mean that we're going to roll over? No, it does not. But it definitely tells me that we are seeing a slowing of momentum to the upside and a slowing of our move. Now, part of the reason that we're seeing the slowing move there, part of the reason that we're seeing the move kind of slow down a bit is because part of our momentum includes this big near parabolic move up that we had right during the election session. And so when you have a parabolic move like this, even if it's a strong move afterwards, what happens is it tends to look a bit weaker from a momentum perspective, because it's kind of like if you're going 30 and you slow down to 15, then you're going pretty slow. But if you're going 98 and you slow down to 85, are you really going slow, right? But you're going slower. And so I think that when we look at this momentum, this part of this momentum is slowing is due to the fact that this move was such a parabolic move straight up, right? So that's something also to consider when you're looking at momentum, is what happened prior to there that allowed that to go. So, hey, Jersey Trader, how are you, my friend? Haven't seen you in a while. How's the baby? Let me know. Keep us in the loop. All right, let me remove all these studies here. And so I just want to keep that in mind. I mean, we are seeing a bit of slowing momentum, but the markets are still rallying higher. And so I'm going to put, above the Globex high. Yeah, it's exactly right, Liz. It's all relative. And so just keep that in mind when looking at this, and don't ever short slowing momentum alone, because we're at an all-time high. So what's our rule on shorting the all-time high? You don't tug on Superman's cape, you don't spit into the wind, and you don't short the all-time high. Now, what does that mean? That means that sometimes I'm going to miss out on this move. And this kind of a move is typically going to get me a stop out. But what did we say about that move? It just sets us up for further positions, right? I call that a setup day. It just sets us up for further moves. And our better position, the market that we talked about the most, that once it got above this area had the best possibility for continued bullish movement, has been the Russell, and that's the one that continued to really has rocketed back up. So, oh, that's awesome. Well, hope you guys are acclimating well to being parents, and I'm really glad to hear that, brother. That's awesome. Give my congratulations and love to your wife. That's phenomenal. All right. So here would be our line of support, would be this 37.75, because we broke above that high. This was our breakout line that we talked about. Now, we didn't really get quality basing here in front of that breakout, but we did get a strong move higher. And that strong move higher that we got there, the area of demand down here is really where I'll look for a quality reversal if price comes back into that zone. That's going to be the best one. All right. Now, if I go to a smaller time period, 15-minute chart, might we see something? Yeah, you might, but none of this to me is really clean, right? None of this is stuff that I want to lean on. There is a little wick over wick area down here that I think is worth paying attention to. A bit late for a tax deduction. Yeah, just a few minutes. All right, equities markets, or excuse me, our NASDAQ market. So looking at our NASDAQ market, we identified, and this was on yesterday's trade feed, is that I drew these lines and put these up there for yesterday's trade feed because Justin did the live trade room yesterday. We had a little rally-based rally. We took the little 15-minute level here as our area of demand. Poked above the all-time high, and we are sitting, just below the all-time high right now. Here in the last few minutes, we actually just reset that all-time high, and so this line here above the all-time high now relative to the S&P, the ES broke its all-time high yesterday at about 8:30, 8:45, and continued to run. The Nasdaq just broke it last night in the Globex session. So it's got actually a little bit, relative weakness is it's not as strong as the S&P. When I look for pullback areas to zones of demand, and I'm on a 15-minute chart here, even if I go to the hourly chart, there's nothing on here that's super clean from a pullback perspective. This area here is not bad. All right, this little region that we have here from yesterday's late morning, early afternoon session might be okay, but looking at it, right, we score it. What's our angle of the way that price left the level? Well, the angle in which we left the level is about a 35-degree angle. So that tells me, what does that tell me? That tells me that on our trade optimization plan, that would score a 0 out of 2. So that means that my maximum score on this trade would be an 8. And anytime that we have an 8, that tells me that it's a confirmation entry. So I'm only looking at it based upon the angle of price leaving the zone. So if we do any basing in front of the level, that's going to score me at a 7 or even lower, and that would make this level non-valid. So I'm going to put it in here, but understand that it's already got some headwind pushing against it, some things that I would be a bit concerned with. All right, next, the Russell. So looking here at the Russell. So our Russell 2000 level, our in 2000 index, this has been the one that, like we said, when we get above this gray box, this is the safe place to look to be a buyer, because this is where we believe that price has a better chance of moving, and that's exactly what we saw. Big move from that area. Now, when I look at the Russell, this area here is the first one that comes to mind for a potential reversal, and this is yesterday morning right at the big rally. This is basically all of our markets have that same time of the day big move up yesterday. Although the Russell's is a little bit further away from the origin of its move, you also have this little wick over wick area here in the Russell as well. Both of those, I think, are still in play. Decent move away in both, not yet retested in either one. So I think both are still valid. Now, I will say that just like everything, if we get basing in front of the level, it's gonna negate that trade and that position. And then the Dow yesterday, we talked about. Well, we drew the line for this potential breakout area. Price did poke above. I say we talked about. We didn't talk about it because Justin did the trade room yesterday. And so in the Dow, there's a little itty bitty wiki over wiki righty here that might come into play, as well as this one right here from slightly earlier yesterday morning. So both of those areas I think can come into play. It looks a bit like the Russell's positions. I don't like the higher one in the Dow as much as I do the other markets, though. I like the lower one down here. All right. Any questions in the equities markets before we move on? So pretty decent day yesterday. Hopefully you were able to catch a little bit of profit coming out of there. Let me share this grid here. All right. Let's go over to energies and metals. So gold crude oil continues to rally up, and crude oil has rallied up into our area of supply as we've got a couple of supply areas up above us. Now we broke above this 49.46 area, which we said that if we get above these highs, then we're going to see this thing grab a lot more bullish momentum, and then this area actually served as a little bit of a support line, and we bounced off of that support line now 3 times, right? We broke above it, we hit it once or twice, we hit it a third time, and then this little area of demand was created, and we bounced off of that and have continued to rally. So my anticipation of this supply zone is that this supply zone is not going to be a very strong area of supply. Let's go over to the origin of that supply zone. So when I go over and look at the origin of that supply zone that's in front of us, what I see is I see a wick over wick that's already been tested once. So that makes it a confirmation entry. I don't know why it's not a confirmation entry already. I think probably because we cropped this short and on the original, and I just never changed it because we were so far away. And then we have a level here up above. Now, this level down below that we're trading into right now, this was formed at a London open time of the day, and so quality level, we're closing in on that zone right now. But based upon the fact that it's already been tested, it has to be a confirmation entry. Now, the other side is that if you take that trade, your target now is down here. Your target's at 51.30. So you don't have a huge movement out of there. And your stop is up above. Let's see, your stop would have to be, let me go find my stop loss line. My stop is still up above 52.03, so it doesn't quite even give me a 2-to-1 reward to risk. So I'm going to remove it at this point. I think that it's probably better to look to the upper level to see if that level is going to make any sense. Now, for those of you that are in the Iron Condor, if you're in the Iron Condor and we get there and we get our Iron Condors at that 52.50 level, if we don't get a pullback, then you're going to see us break above the top of this upper level. That Iron Condor then is going to need to be closed out or rolled. Now, when you look at it, that level's got, I think, just a few days left in that position. So if we do bounce down from there today, then I would stay in it over the weekend for the sake that you're probably going to get the theta decay of the weekend theta decay. And I don't think that we're going to see a big gap up in crude oil. We haven't normally seen a lot of crude oil gaps over the weekend. So I think it's probably okay to kind of stay in that position at that point. Now, what about getting long again at an area of demand? Well, if we do pull back to a demand zone area, the level that I am most inclined to look at, just based on what happened in the overnight, is this little wick over wick area right here, which is our target if you did take one of those upper shorts. So you've got a little wick over wick level here. It's not formed at the greatest time of day, but it's not a bad time of day either. Yeah, oh yeah, Dennis. Natural gas is a completely different story, but crude oil, You don't see very many gaps in crude oil over the weekends. If you feel, I mean, if you feel like playing the lottery, just go long nat gas over the weekend and see what it does, or go short. Now the problem is that lottery ticket, you risk more than you might make, so that's the problem. Gold, we did get gold yesterday, sold off a little bit. We'd had this level here in gold. If anybody remembers this trade that we'd set up earlier in the week, we got a pretty good move off of that level, worked for about a 3-to-1, and then we came back down and came close to it, hit it a second time and moved away. Now, unfortunately, I will tell you, I was hoping for basing, didn't get it, and yeah, famous last words. The basing was not prevalent here, so there's really no reason for me to enter that position. The other reason that I would not have entered that position is because I was sleeping, and I don't do set it and forget it trades overnight, because I don't get to see the arrival into a level. Now, it did create a speed candle. Speed candles do typically tend to get retraced, and so I am going to wrap my lines around this area up here, knowing that those speed candles do typically get retraced, although not always. And now we've actually put in another decent little move down here in the last few minutes. So if you're more aggressive and you really want to trade today, and you really want to get after it, you've got a decent entry here, or potentially up here, that the market has a better chance of reaching. And so if you want to be a bit more aggressive, those are the levels that I would say, okay, I'm willing to get in. I want to try something out. It'd be somewhere around this 1888 by 1890, on a little bit of a retest. So because sometimes we're not gonna, I don't think that we're gonna make it back up to here today, unless there's unless something happens. Now remember, all of this can change right at the open, and so how do we trade right at the open? I will tell you, for futures markets, I don't jump into trades right at market open. If I'm already in a trade at market open, I'll stay in it. I'll move my stop or whatever, but I don't like to get in right at market open. Do me a favor, type in the comments down below. Do you like to trade right at market open? Why or why not when you're in the world of futures? I don't like to trade exactly at the open. I like to let the open happen, and then does it drive me into levels of supply or demand? Because I've seen that oftentimes at the open, we see sometimes a widening of the spreads in certain markets, and sometimes we see a wicky price action that happens at that time. Natural gas. So in nat gas, we had some selling pressure up here. That's a good point, Liz. That's always an issue that it could do. I don't know that it's going to change all that much, though, so I'm not overly concerned with it. Never have I ever. Nat gas, a little bit of a breakdown area here below 2.609. If we get basing in there, and we're getting base fairly close to the level, so even if you took it now utilizing this basing, that's okay. It's not ideal. I'd much rather see this kind of price action, right, with narrow range candles. Yeah, not futures or options. First 15 minutes pretty volatile. That's exactly right. I'll say this, on equities, it's a completely different story. On equities, I will, but not on futures and not on options. Okay. And then copper is continuing to show its bullish, its overall bullish nature. As we saw that slowing of momentum a bit, got a little bit of a pullback, and then boom, kapowie, continued to rally higher. And so, on here, we would look for a retest to a quality area of demand for a pullback. I don't see one as of yet, so let's just keep in mind a breakout above the high. When I look at quality areas of demand, my eyes look at this, but that's kind of a retest of this area here. It really comes back to this zone in there. All right, let me share this grid. Zoom in on this one first so everybody can see what that price looks like. All right, next, let's look at our ag markets. So looking at our agricultural markets, we had soy, which we were nowhere near any of the levels that we identified in soy. We've got a high above here that could become a breakout. And then I think that if we break above there with quality basing, that 1400 is a pretty good target. You've got nice whole round number resistance up there. This level here is all right, but it's not the greatest. We based a bit in front of it. So I just don't have anything on here that I like. I feel like I'd be forcing any of the trades on that level. Corn bounced off of our little demand level that we had talked about the other day. We did get a decent bounce out of that zone and then another retest into that zone, and prices moved away from there pretty clearly. If you took that trade, then you should at the very least have your stop at break even. You've moved about a 2-to-1 from there, or actually about a 3-to-1 from there, not quite a 3-to-1. I feel like it's stalling, and so I would take my profit off the table before the week and then just wrap it up for the week. In wheat came into our level, and then it was a very, very quick stop out. And if you didn't take the stop out, maybe you took your stop below the pivot and you went a little further, 6 candles later, it had gone nowhere. And so it still basically has gone nowhere. And so now that's actually set up for a breakdown better than anything else. So of all of our agriculturals and our commodity markets, to me, this is our weakest one to give you a short potential entry. And when I look at it on the 4-hour, it's still up, but boy, are we flirting with actually coming back down. Now, I wouldn't be surprised to see us come back down and make it to this flip area or even a bit lower. That wouldn't be too shocking. And then bean oil also not a whole lot in here that I'm jumping up and down about as far as tradable opportunities. We've got some supply above us. When I look at this on a 4-hour, we are still continuing the trend higher, and so getting above here is certainly going to make us know that that trend's going higher. When I look at my momentum on here, my momentum is a little bit lower, a little bit weaker, but not too terrible. So I think that the bullishness is going to continue. I think it's just about how do I get in and trade some of this bullishness. You could do a bit of a breakout above this region here, provided that we get a bit more basing. That might be a way to kind of get in and take advantage of this move higher. All right, let me share this one. All right, so let's move over to bonds and currencies. So bonds, we finally saw our move. We broke below our range on the 10-year note, and so we're continuing its overall move down. Now, that overall move down tells me that my best supply level is probably this little wick over wick that's hidden right here, if we find a way to make it back up to that region. Our momentum is strong to the downside. Looking at this on a daily chart, we can see that the bonds are really, I think there's a chance we can make it all the way down into this region here, because that's getting back to the lows of where we kind of sold off during coronavirus's lowest point. Well, I say during the market's reaction to the coronavirus's lowest point, I think is probably better to say. And so looking at the 4-hour chart, my trend is down. I've got an area of supply up above me that's fairly clean. I don't know that we're going to make it back up to that area anytime soon. You could theoretically also look for a breakdown below the Globex low here, because there's no real demand to reverse off of. Same thing in the ZB. That's the level we identified yesterday, and price just hasn't come back to that. And then the same picture in the 30-year. Looking at the euro. So the euro, we talked about this area yesterday. Well, I drew the line for this area yesterday as a potential breakdown point, and I do believe that with the strength we're seeing in the dollar, that our currencies, and in looking at that, all right, we're seeing a little bit of dollar strength, and that dollar strength that we're seeing is really what's propelling a lot of these currencies lower. And so I'm going to kind of continue looking at where's my supply areas in most of these currencies. Is there room to roam? Are you talking about on a breakdown here below 136, Liz? Or I'm sorry, because I didn't have my chat box up. Or are you talking back on bean oil? I apologize. Remember, there's a bit of a delay on the chats, and when you hear when I read them, and when you hear my voice, so there's a little delay. So just type in, let me know, and I'll go back to it. So looking here at the euro, I think we're going to continue to head down. I think it's probably the better and safer bet, and we're actually putting in a decent candle-to-candle short entry opportunity right now. So if you wanted to go, below, one of these candlesticks as we create a candlestick reversal pattern, I think that's actually a fairly safe entry in a candle-to-candle style. I think that if you go candle-to-candle, remember your stop goes above the highest wick, and your entry goes below the lowest of that candlestick. Okay, and then Canadian dollar. I think Canadian dollar is actually a bit stronger than the euro and some of the other currencies. So I don't really have anything for the Canadian dollar today. We've got some supply above us that's not great. We got some demand below us that's not great, but nothing is great. It's just bleh, right? If I were to call this, I would just call this a very cornflake and water scenario. There's just not a lot of flavor there. So, and I apologize if you love cornflakes and I've offended you. All right, if I've offended you because you love cornflakes, then you are too easily offended. All right, and then let's go take a look at. I'm going to slide back to bean oil real quick, Liz. Oh, 638. You're talking about wheat. Okay, so you're talking about wheat. So your question was there enough room to roam? I think depending on where your stop is, I think there's 10 points for sure. I think you've got 10 points for sure. So if my stop is 3 points, then and I got 10 points to roam, then yeah, there's plenty of room to roam. If my stop has to be 7 points and I've only got 10 points, then no, there's not enough room. So it really comes back to it really comes back to where is the pivot above my breakdown line. So, Trent, you hate it when people diss cornflakes. So do I. Just just makes me angry. So angry. I'm gonna light things on fire. All right. So the New Zealand dollar futures. Looking at the New Zealand dollar futures. So we had talked yesterday about or not yesterday. I'm sorry, last week about the kind of slowing momentum and that we pulled back. This was an area of demand, which then we kind of based around in it. And now I figured that we would chop around this area a little bit. So, no, Liz, I'm not overly concerned. We have to break below that 638 support area, right? We've got to get below that 638 support area for a breakdown for me to get in. I still need to see basing in front of it for me to take that trade. So in looking at this one on our 4-hour trend, our 4-hour trend is still up, like we talked about. The momentum slowed down a bit, but right now we're kind of in between areas. We came really close to this area of demand yesterday without really getting filled, so that needs to become a confirmation trade. So if we do come back to there, that's a confirmation, although we're basing a little bit in front of it. There is a little supply area up here right there on formed at a really good time of the day, but we're basing in front of it as well. So we're basing in front of supply, we're basing in front of demand. So our trade is to not do anything. To not do anything. It's to wait. It's just to be patient. And now, if we come back down here and let's say we hit this level and we drop through it, now I'm going to set up for a reversal trade. Great British Pound, also like the euro, we talked about the fact that it's showing a bit of weakness. We had this line of support here, kind of drew this one in as if we get below here, this is really where we're going to see price be safer to kind of move down. And to me, that's a lot like the level in the Russell, where the Russell, we said, I don't really have a clean entry, but I know if we get below a certain point or get above a certain point that we've got a better chance of price moving. So I think if we get below here on the 4-hour or the hourly chart, then you've got a better chance of price moving. The problem is that we've poked our nose below there 4 or 5 times this week without getting through it. And that's because, take a look, we poked below it, no basing. We poked below it, no basing. We poked below it, maybe a little bit of basing. And that was during the Globex session. I still would need the basing here for a breakdown. But I think if we do start to break below there, then it's going to set you up for some supply levels. As with my other currencies, I just don't have a lot to trade off of today in here. Next, the Japanese yen. Japanese yen also same kind of picture. A little bit of chopping it. Now this one's come below there with a bit more ferocity, if you will, and I think that has a better chance of staying below there. When I look at supply areas, I come to this one up here. I don't really see any other super clean ones beyond that. You got a demand area here, which is the gap fill, and it's a gap fill from a contract rollover, which is usually pretty clean. But once again, not a whole lot here to trade. I know this is going to sound like a broken record. And then in the Aussie, so the Aussie dollar, that line is here. So that line that we would look for would be down here that we would have to break below. Coming up to an area of supply, very much like the New Zealand dollar, but our trend is still up. So I don't necessarily want to short against that trend. I will say that if we get above here, obviously we've got some room to run up to the next area of supply. And so I'm not willing to short against those levels. If I move to a 15-minute, this little level here, I think we could bounce off of this and continue to see price run, but I think that we're much better off just kind of holding off and not forcing it. So that's kind of the theme for the day, is not forcing it in our currency positions. All right. So those are the levels that we have. Somebody said gold was hit, so let's go take a look at our gold setup on our 15-minute. Yeah, so gold's rallied back up into that level. That was the one that was much closer if you're more aggressive, and we've gotten a nice little move away from it already. So let me know if in the comment section if you were able to get in on that gold position. It's awesome to hear. It's kind of just that's just kind of hovering around. Let's see if price comes down from there on the open. So, all right, everybody. Well, that's all I have for today. I will see you Sunday night in the Sunday Night Live Trade Room. If you guys have any questions, please, as always, shoot me an email, chuck.fulkerson@tradersarmy.com. I'll type that into the chat box so that everybody has it. That's the best way to get a hold of me. And until tomorrow, until Sunday, everybody, hope you guys have a great weekend. Stay safe, trade well today, keep an eye on the trade feeds, and we will update it. Talk to you soon. See ya.